bring on board then Bhaskar Bhat, MD at Titan. He joins us on the show right now. Let's try and analyze what their numbers were like, what he made of the budget. Mr. Bhat, morning. Thanks so much for joining in. Life's back to square one after the budget for us. So let's talk about your numbers first. Your reported revenues, Mr. Bhat, indicate a 7.4% jump in jewelry. But since this is not comparable because of the GST challenges, tell us what has been the tax-adjusted growth in jewelry revenues?
Well, we have been consistently growing at retail over 25%. So this aberration of 7% is, is an adjustment. That's the primary sale number. We really track the retail sales. So retail sale is going well in jewelry as we have been, indicating in the past. Therefore, for the quarter, the 7% is an understatement. We had talked about it because there was an advancement of sale in the previous quarter, a large amount of about 170 crores, and this happened because of several reasons we had talked about last time, particularly the withdrawal of the PMLA and in the last minute on the 18th of just before and the introduction of the PMLA, the withdrawal, etc. So that is an aberration. It doesn't represent the actual growth in the quarter.
You mentioned, Mr. Bhat, in your quarterly update that Tanishq once again has reported a very strong revenue growth. So tell me, which part of the jewelry business then saw a decline?
No. Well, Tanishq is the brand which delivers 95% of the business in jewelry. So there's been no decline. Gold Plus, which was a brand we have converted to Tanishq in many of the stores, that would obviously be a decline. But then there is no decline in the jewelry business. It's a 7.1% that 7.4% that you're talking about. I just told you is an adjustment because there was an advancement of sale in the previous quarter. And this represents the primary sale because we have a channel of L3 partners who buy and then sell. But what matters is the retail sales, and retail sales has been growing healthily. October was flat, November, December grew.
There was this abnormal uptick in your base because of the GST impact. First restocking and then you gain market share. So if one has to really talk about the realistic growth in your jewelry business, where do you think numbers would settle? I mean, 50-60% growth is not going to sustain. We both know that.
50-60%, yes, the abnormal, we had talked about that in Q2, but we had been indicating a 25% growth and that we stay steady with.
Are you growing at 25% because the market is growing, because demand is back, or this is pure market share gain, and this market share gain could last not as a cyclical trend but more like a secular trend? What I'm trying to understand is that this entire belief which market men have that Titan is gaining because of unorganized moving to organized, that's not going to be a one-quarter trend. This is going to be a multi-year trend, and you will see incremental growth because of this.
Completely, I agree with you. I would say that the impact of the formalization of the market and the in a way sucking out of the cash transactions from the industry, because this was one of the large contributors to black money generation, etc., and post demonetization, that's been in effect. But that has brought significant gains for the formal organized players like us, particularly Tanishq. So migration is what we call that. We've had customers migrating from other jewelers to us. That coupled with the GST introduction in July, both these have contributed to the growth. And Tanishq, having always been an adornment brand primarily and not an investment brand, has gained significantly on account of this. Therefore, what would happen to the market, the total industry size, because of the formalization and the in a way withdrawal of cash from the industry? that is still not clear. But we are seeing certainly in Q3 everybody grew, but we grew rather more than the other industry players, and we gained market share, and that market share gain will continue, which is why we are confident of the 20 to 25% growth, consistent growth in the jewelry business.
Right. Mr. Bhatt, what's aided margins, and how much can margins expand from here? Because, margins have gone up quite significantly, and especially the margins in the watches business have done very well.
Yes, margins across the company have gone up. In jewelry, as we had been talking to you, it's the combination of the diamond jewelry, which is a higher margin business than the plain gold jewelry, and even the big thrust on the wedding jewelry. We are selling now rather more higher end jewelry. The price points and the ticket size has gone up quite significantly, and with ticket size the making charge percentage also goes up in plain gold jewelry. So that's the trend in jewelry. How much it can go up? It can't go up much more, because in the quarter the increase in margin also pertains to certain adjustments on account of GST. In watches, we've done cost corrections, as we've been talking to you about. We've done cost compression, gone into a cost compression program, which has yielded results. But more than that, the top line growth being what it is, we are back to getting the benefit of scale apart from the reduction in cost. And brands like Titan, Fast Track, and within Titan, Raga particularly doing extremely well. All these are working towards the margin improvement. Despite the fact that we dropped prices on account of the GST reduction from 28 to 18% in watches, we dropped by about 7.8% in watches.
Right, but despite the cut in GST rates, I believe the eyewear business is not picked up as one had hoped. Could you give us more clarity there, more color on how that business is shaping and the outlook?
Yeah. Eyewear has been particularly impacted on the sunglasses side. Actually, on the prescription eyewear side, we've grown healthily. We are on target. Margins have improved. It's the sunglasses business which has got significant. It's a very unorganized business, and it has got significantly affected because that is not. We don't have an own retail channel there, and it's a product which sells through the trade channels. And trade channels actually were affected significantly on account of the introduction of GST. They were not ready, and therefore there was very little purchase. We were 55% off target, and it's the sunglasses business which it will come back as we go into summer. But yes, there has been an impact.
Mr. Bhatt, but the numbers look good, and I think that's something that the market will take away for now. Congratulations on this quarter's earnings, and we wish you the very best for the future.